Hello students. To calculate depreciation, there are mainly two methods. The first one is straight line method and another one is diminishing balance method. Let us solve a problem from Telangana State Inter First Year Accountancy textbook. Ganesh bought a machine for 17,000 and paid for its installation 3,000 on 30th September 2017. Depreciation is provided at 20% under the straight line method. Prepare mission account up to 31st March 2020. Let us prepare missionary account. I have mentioned the problem in a brief manner on right side, and for better understanding I have mentioned the problem in a brief manner on right side. First of all, go through the working notes and the journal entries. To calculate depreciation, we should follow financial year or calendar year. Let us assume that the firm is following financial year to calculate depreciation. As we already know, the calendar year starts from January 1st and ends with 31st December. Similarly, the financial year starts from 1st April and ends with 31st March. So as of now, we have to calculate depreciation for 6 months. Why? Because Ganesh bought that machinery on 30th September and we have to calculate depreciation on 31st March for every year. So from 30th September to 31st March, there are 6 months: October, November, December, January, February, and March. And we don't include September. Why? Because he purchased that machinery at the end of the month. That means we calculate depreciation from 30th September 2017 to 31st March 2018 for 6 months. Later on, we have to calculate depreciation for two complete financial years. That means 1st April 2018 to 31st March 2019 and 1st April 2019 to 31st March 2020. Journal entries. Ganesh bought a machinery. Machinery is asset now. So for assets, we should follow real account rule. Real account rule is debit what comes in and credit what goes out. So machinery is coming to the organization, so we should debit the machinery, and cash is going from the organization. That's why we have to credit the cash account. And the journal entry is machinery account data to cash account. He paid for 3,000 for installation. Installation is an expense to the organization, but we don't debit installation expenses as per nominal account because installation is a capital expense. Capital expense is a non-recurring expense. So we have to add that expense to the machinery account. So the journal entry of installation charges machinery account data to cash account. For depreciation, the journal entry is depreciation account data to machinery account. Depreciation is a loss to the organization. Losses comes under nominal account. Debit all expenses and losses, credit all incomes and gains. As the value of machinery is decreased, so we credited the machinery account in journal entry. Now we have to prepare the machinery account based on journal entries. Just observe the journal entries. The machinery account is debited while purchased the machinery, and machinery account is credited while depreciation is charged. So we are preparing machinery account as the word machinery account don't appear on the both sides, debit side and credit side. That's why we are debited cash account. We have to calculate depreciation on 31st March 2018. So we credited the depreciation account and we have to calculate the depreciation for 6 months only. 20,000 into 20 by 100, we will get 4,000. The 4,000 depreciation amount is for complete year, but we have to calculate for only 6 months. If the depreciation for a year is 4,000, then what will be the amount for 6 months? It will be like 2,000. Just cut the amount into half. The value of the machinery is 20,000 on 30th September 2017. After using 6 months, the value is reduced to 2000. So 20,000 minus 2000. At present, the value of the machinery is 18,000. That's why we have to write on 31st March 2018 by balance carried down 18,000 on credit side. Write the total 20,000 20,000 on both sides. Then after 31st March 2018, 1st April 2018, again we have to brought down the 18,000 value to the next financial year. Here the year is not changing because after March the month will change, not the year. So remember that point. Then we have to again calculate the depreciation on 31st March 2019, which means 18 to 19 for complete year. Here we are following straight line method. That's why we are taking the same amount 20,000 and we have to calculate on it. So 20,000 into 20 by 100, we will get 4,000 rupees as depreciation. Again we have to find out the balance carried down. So similarly 18,000 minus 4,000, we will get 4,000, and as totals we can write 18,000 and 18,000 on both sides. After 31st March 2019, again 1st April 2019, remember that the month will change here, not the year. After March, April will come. Don't write the 1st April 2020 here. Again we have to brought down the value 14,000 and we have to calculate the depreciation for the last financial year 31st March 2020 by depreciation 4,000 because we are following straight line method. Again we have to find out the carried down value 14,000 minus 4,000. By balance carried down we will get 10,000 rupees. So the final answer is 10,000 rupees here. We have to calculate depreciation up to 31st March 2020. So the answer is 10,000 here. Write the totals 14,000, 14,000 on both. So depreciation is as simple as that. No worries. So first we have to write debit side to cash or bank account and we have to enter the amount 17,000 plus 3,000. We will get 20,000. Then on credit side, on 31st March 2018, we have to calculate the depreciation. But we have to calculate the depreciation for only 6 months. So 20,000 into 20 by 100 and 6 by 12 and we will get 2,000 rupees. By deducting 2,000 from 20,000, we will get the carried down value 18,000. So after 6 months, the machinery value is 18,000. Then we carry forward the amount to next financial year, that means 1st April 2018. Then again we have to calculate the depreciation, but for here we have to calculate for whole year. So we will get 4,000. 18,000 and 4,000 we will get 14,000. Then we carry forward that amount to next financial year. Then we will calculate again 4,000 rupees depreciation. Then we will get 10,000 rupees balance carried down value. So after using that machinery 2.5 years, the machinery value is 10,000 rupees. That means the machinery value is 20,000 at the beginning. After using that machinery for 2.5 years, the machinery value is reduced to 10,000 here. I hope you guys you got the problem, and I will give you an advice. Before starting the problem, just observe the dates and the method like straight line method or diminishing method. And if there is a sale value or installment value, then only start the problem. Thank you guys. If you like the video, like, share, comment and subscribe to our channel.